Greetings. Welcome to my weekend market recap, 12th February 2022. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagarnandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if option trading is suitable for you. I use the Q systems for my trading. They run as add-ons to the TradeStation and MetaStock platforms. That was my PowerPoints. Let's start with live systems. A look at the global markets starting with Australian index, all ordinaries. All ordinaries broke below the watermark support at this point. It went far below the lower boundary and then recovered to the value area. At the end of the recovery on Thursday, it displayed the bearish indecision, and on Friday it displayed the bear release signal. Therefore, it is continuing to be in a downtrend, lower high, lower low. If price can go down from here, then we may look for shorting opportunities. All ordinaries is in a downtrend. Preferred trading direction is bearish. There is no immediate trade setup, at least in all ordinaries. What about Japan index topics? Similar picture, broke below the watermark support at this point. After going far below the lower boundary, it recovered. Here it displayed the bearish indecision on Friday. In the weekly, price came close to the trendline resistance. It is already far away from the recent swing low. Therefore, preferred trading direction will be bearish. That will be the lower risk direction if price goes down next week. China market CSI 300 index. CSI 300 also broke down below the watermark support at this point. China market was closed for 1 week for the lunar holidays. This week the market was open. You can see it didn't move much. Tried to go down, created a long lower tail candle, then moved sideways for 2 days, and on Friday tried to go up but created long upper tail candle. The weekly shape is also indecisive. Weekly has displayed a bullish indecision signal. It is at the lower boundary in the daily. Even if price can come down next week, I can see it will come close to the weekly trendline support. Therefore, we will not have any easy shorting opportunity in CSI 300. Instead, if it can go up, we'll have lower risk buying opportunities. However, it is in a downtrend. If we get any buying opportunity, those may not be of trend following type, those will be reversal type, and those may not be in CSI 300. Looking at the current picture, it doesn't look like it will give any long trade setup on Monday or Tuesday on the index itself. If we get buying opportunities in individual stocks, those may be reversal types, bounce, box, or headwind types. Currently, it is in a downtrend, but there is no trade setup. FTSE index UK market. This is bucking the trend of the other global markets. FTSE is in an uptrend. Friday we have a bullish shape candle with long lower tail, and the weekly candle is also bullish, both in color and in shape. Earlier we had 3 bearish indecision in a row. When I saw that in the market roundups, I mentioned that it was not the right time to buy because of the series of bearish indecisions. But now we have a bullish color and bullish shape weekly candle. Friday's candle is also bullish. So we may be able to get buy setups in individual stocks. Not in FTSE itself. FTSE is some distance away from the recent swing low. So we don't have any low risk buying opportunity in FTSE itself. We may look for buying opportunities in individual stocks. Interestingly, it is in an uptrend. And India's Nifty 50, this is moving sideways. That was true in the previous market roundup also. Price is bound by trendline resistance and support. Even if price comes down on Monday, we will not be able to short because price will be very close to the trendline support in both daily and weekly. Instead, if maybe Monday and or Tuesday price comes down, it will reach one of the trend line supports, and then if price can bounce up, we will most likely have low risk buying opportunities. We may look for that. Preferred trading direction will be bullish once price hits one of the trend lines and then bounces from there. Currently there is no trade setup, moving sideways. That was a look at the global markets. UK market is moving in an uptrend. Australia, Japan, China are in downtrends, and India market is moving sideways. If we wanted to know overall how is the global market, we could look at the global index, custom index, that was moving sideways. Earlier I showed that in the previous market recap, and that is remaining true. It is moving inside a box and it is in the middle of the box. Interestingly, it has trend line support nearby. If price can come down one day or 2 days next week, it will hit one of the trend line supports, and from there if price can bounce up, then we will have lower risk buying opportunities. There is no lower risk shorting opportunity immediately because there are a number of trend line supports, and then we will also have the watermark support close by, moving sideways. Now let's look at the USA market. Okay. USA market, I restarted Metastock, it crashed for some reason. Starting with QQQ, this is now in a downtrend and we have a trade setup on Friday. That is the flow trend following short setup. Lower high, lower low, price recovered from the recent swing low and then tilted down with a magenta candle in daily. Weekly candle color is magenta, that is meeting all the checklist requirements of a go with flow or flow short setup. SPY, even better short setup. Why I say even better than QQQ? Because here price is further away from the lower boundary. Lower high, lower low, price recovered from the recent swing low, then displayed a magenta candle and also a flow short setup. Weekly is magenta, that is allowing us to take the trend following short setup. Dia, this is also looking bearish. Lower high, lower low, price recovered and then tilted down, displaying a magenta candle. Weekly is magenta, also giving a flow short setup. However, there is a trend line support nearby in weekly. Therefore, if I wanted to short any of the market ETFs that we saw so far, we didn't see IWM yet, I would prefer to short QQQ or SPY, not DIA. But it is also looking bearish. And small cap ETF IWM, this is less bearish. Interestingly, the bullish headwind once again could catch the absolute bottom of the recent down move. Then price recovered. Friday price came down, but it is less bearish than SPY and QQQ for two reasons. One, Friday's candle shape is indecisive. It has both upper and lower tails, and also it closed right at trend line support. The weekly candle is also indecisive in shape, in color as well. That is a mixed picture. Small caps are not giving any short setup, at least not IWM. SPY, QQQ giving trend following short setup. DIA weak, but it has trend line support nearby. So I'll think that we'll have plenty of shorting opportunities right now. Now, what about the possibility that price will go up next week? In that case, I will like to take long trades in small cap stocks, IWM constituents, because IWM is at trend line support. Price going up from here will give something like a bounce setup, and the next trend line resistance in enough distance away to give me a trade with attractive reward risk ratio. That is the USA market analysis based on market ETFs. Let's look at the market internals. Incidentally, my next master class will be on market breadth analysis, and I have completed preparation for the class. I will take the class sometime next week. This is market breadth total view. The analytics is based on 2 composite indices and 4 major indices, all combined into a single chart. If we look at the candle pattern first, and this candle pattern is of a custom index created from these 4 indices. Market total view custom index. We see on Wednesday we had a cyan candle color. In market breadth total view, the cyan candle color is an Eureka day. That is a very bullish day. Bulls are in control. When the Eureka day comes after a move down, that Eureka day is the day to start buying stocks. And you will see the large accumulation count either coincides with that first Eureka day, which can be considered a follow-through day, or it precedes, either coincides or precedes the Eureka day accumulation count. Now we had an Eureka day on Wednesday, however, the accumulation count was not large enough. You can see the color was in yellow color, not in green color or not in cyan color. So I will not put so much emphasis on the Eureka because the accumulation count was not there, meaning it was not broad and deep enough, the up move, though it was bullish. What is the difference and why is the difference? The Eureka is calculated based on only one exchange or composite, either NYSE or NASDAQ, whereas the accumulation distribution counts look at the 2 composites and 4 major indices together. Therefore, the accumulation distribution counts tend to be more meaningful. So if I have an Eureka day like we had on Wednesday that was not accompanied by significant accumulation count, I will not think it is as bullish as an Eureka day that had large accumulation count. So in any case, we had an Eureka day on Wednesday. Immediately it was followed by a reversal day, that is a bearish day, Phoenix day. The color was magenta. So from bulls in control, it immediately flipped to bears in control. Those are usually volatile areas and we may stay away from taking trades. I noticed that on Thursday. And then on Friday, price fell down once again with another Phoenix day, heavy bearish day. So Friday we could start to short stocks, and I in fact shorted some stocks on Friday. So market breadth told us that we could short on Friday with more confidence. And we saw that SPY QQQ in fact gave flow trend following short setup. Market breadth candle chart is looking bearish as well. If we look at the percentage of stocks above 50 MA, the yellow line that is continuing to go down, still some distance away from the 20% level. So we are allowed to take short trade from that angle as well. If we look at growth versus value, the magenta line, we see now it is going down in this area and also at the right edge. So if we want to know whether to buy growth or value, the answer will be avoid buying growth stocks. and small cap versus large cap, the cyan line, earlier it was steadily coming down. Now it has started to go up at the right edge. So we may prefer buying small caps. Now I am, as usual, carrying out this exercise live. I didn't go through it earlier myself, and you notice how different signals are reinforcing each other. When going through the market ETFs, I concluded that if the market went up next week, then I would like to buy small cap stocks because IWM was right at trendline support on Friday at the close. And now from this market breadth small cap versus large cap study, I see that is also tilting up. Therefore, that is also telling me to prefer small caps for trading in the long direction. If I want to know whether Nasdaq or NYSE is stronger, now drilling down from the total breadth to Nasdaq and NYSE, we look at the 50-day moving average, percentage of stocks above 50-day moving average, that line, yellow line. For Nasdaq, it is at around 30% level. For NYSE, it is around 40% level. So we are seeing this relative strength of NYSE for a long time. However, for both of them, after this recovery, they tilted downward at the right edge, that is allowing us to take short trades. Now, if we look at the candle colors, you can see that the phoenix came from Nasdaq on both Thursday and Friday. That is also showing that Nasdaq was weaker than NYSE. Heavy bearish control was in Nasdaq, not in NYSE. And also the Eureka day on Wednesday was in Nasdaq. More volatile and more bearish. That is how Nasdaq is looking relative to NYSE. Let's look at the mega caps using the mega cap custom index. Well, that is also giving a flow trend following short setup. It has lower high, that's why we have a resistance trend line, lower low. Price recovered from the swing low and then tilted down, giving a magenta candle that's meeting all the requirements of flow short setup. So we have enough reasons to take short trades, and we could actually take them on Friday itself. Later on I will show how I managed some of my long positions that I shared publicly, and also how and why I started shorting on Friday. Let's look at the market first from some other angles. This very useful study of sectors, industries and stocks breadth, advanced decline breadth from 1 month to 1 day. Here you can see what I call the long term, medium term and short term breadth information. Not external view but internal view. Similar to market breadth, but market breadth looks at different dimensions, small cap, large cap, technology stocks, etc. And this breadth looks at the market from another angle, from sector dimension, industry dimension, stock dimension. The long term view is the 1 month view, and that is bearish. Medium term view is the 5 and 10 days, that is bullish. We have more green colors than red. And the short-term view is the 1 and 2 day periods, that is bearish. So if you think of it, it is like we are in an overall downtrend, then price recovered somewhat or breadth recovered somewhat, medium term became green and then it tilted down again. Short term became red again. From a different angle, but this is also showing we are in an overall downtrend, price recovered and tilted down again, giving us from the breadth perspective somewhat like a flow trend following short setup. That is also telling us that the preferred trading direction is bearish. Isn't it nice? In the last couple of webinars, I showed that based on this color coded analysis, we did not have any preferred trading direction. We could trade in either direction or we could stand aside. But now it is very decisive. We have a preferred trading direction right now, and that is bearish. If I look at the bucket analysis, how the S&P 1500 stocks are distributed across the 10 buckets from lower band to upper band, Bollinger Band, and then beyond the lower and upper bands, we see that the distribution is very close to a normal distribution, looking like a bell curve. So we don't have stocks at either lower extreme or upper extreme. We are allowed to take short trades from this direction. Is it bearish or bullish? Slightly bearish because 55% of stocks are below mid Bollinger Band. Earlier, and I tweeted it at that time, the percentage of stocks below the lower band hit 60%. That time I tweeted that the recovery was coming. Recovery came, but stocks didn't turn much bullish. If you track this bucket pie chart, the green portion hardly became bigger than the red portion, and on Friday the red portion became larger again. Therefore, from this bucket analysis perspective also, we were severely down, recovered somewhat and tilted down again. So we are allowed to take short trade, that is the preferred trading direction from bucket analysis also. Lastly, let's look at technical analysis. And as you go through this analysis, you see that we are able to decide, me, you, anybody can decide based on color coded analytics, what is the lower risk trading direction, preferred trading direction or directional bias. And so far we see that is bearish. Now let's look at technical breadth. First, the weekly interval, all signals mixed. Trend continuation signals are more bearish, so we are allowed to take more bearish trades from that angle. Strength was more bullish. That was because of relatively larger number of gap ups. We had bullish pressure, bearish pressure both. So that didn't contribute. That means pressure did not contribute to the strength signal becoming bullish. Strength became bullish because of larger number of gap ups. However, after bullish strength, we now have bearish reversal, and the reversals are much more than the gap moves. Therefore, though strength is bullish, taken together, strength and reversal is clearly bearish. So strength reversal taken together is bearish, trend continuation is bearish, preferred trading direction is bearish from this angle. if we look at Friday's picture, that is very bearish throughout. All signals bearish 80%, strength signals bearish 76%, trend continuation 82% bearish, reversal also 80% bearish. So Friday we could confidently take short trades. What kind of short trades? We could look at the size of the bar charts, bars. We see large number of breakdowns, bearish breakouts, 12.5% in my trading universe. And here I ran the finder on mid-price stocks, liquid mid-price stocks. So we could look for breakdowns, we could look for flow, trend following short setups or pullback setups. In fact, some of the stocks would have given both flow and pullback short setup. You could look for short setups across all the categories. You can see the red bars are all of them. In fact, when I look at all the red bars for all the categories, they are bigger than the green bar. So we could look for short setups across all the categories. So preferred trade duration is clearly bearish. Now I did have some long positions, and let me share how I manage them, and then I will share how I took some short trades. And then if I have more time, I may look for shorting opportunities either using top down or bottom up approach. First stock is Whale.K, real estate stock. I think I shared the shorting idea on this day as a flow short setup. And on this day, how well this stock, well, WELL, you may read the ticker symbol from the top here. In Metastock, it shows the ticker symbol, and sometimes it may show the stock name also at the top. So well was looking on this day exactly same like how SPY and QQQ are looking at the close of Friday. So it gave a flow short setup, and I shared the idea on that day. Very next day it hit the lower boundary, that was the initial profit target, so profit could be booked and I am out of the trade already. Another long trade I shared, and the next two trades I'm going to discuss, I exited both of them on Friday completely. One was an airline stock, Safe. And by the way, these ideas I am going through now, I shared them before knowing the result on my website sagarnandi.com under the category 360 degrees trading ideas. I only review trades that I shared publicly before knowing the result. If I go inside the category, this is the post on Well, and I'm also going to go through Safe and this stock, KFC China, Yung China. Let's go through Safe and Yung China, Yung-C. Safe. Safe gave a breakout and gap long trade setup on this day. The industry was very strong, if I remember correctly. Let's go through the post. It's useful to go through the post to see exactly how I looked at it when I shared the idea. Spirit Airlines, shared 5 days ago. It had a breakout setup and a gap long setup. the stock was up by 15.6%. The airlines industry, service and airlines, was very weak for a long time, and then it suddenly became the strongest industry. Right now we have 148 industries in the USA market, became the strongest industry, and on top of that it accelerated the most. So it was a clear situation of industry turnaround, no ambiguity. Once again, here also we decide everything based on unambiguous color codes. We take ambiguity out of the question. That's why we can take trades easily, relatively easily. Don't have to go through many complex calculations. So industry allowed me to buy. Save Airlines, the fundamental scorecard showed that Spirit Airlines actually. Spirit Airlines, the ticker code is SAFE. Valuation wise, it was not attractive. However, it had high earnings growth. In Q techniques, we are allowed to buy either based on valuation or growth. Very simple technique. So it was a growth stock and it had a short squeeze potential. 94% of peer stocks were up. Fundamentals allowed me to buy as a growth stock. And technically, this is how the stock looked like when I shared it. It was at 25.49. In fact, right at the open, 5 minutes after open, if you ran the finder scan, you could identify safe as a gap and breakout candidate. It tried to go down, interestingly hit right the trendline resistance, which became support now and jumped up from there. You could buy any time since then, since the time it hit the trendline resistance, which became support and went up from there. I shared it at this price level 25.49. It had a breakout setup, gap up setup. The weekly was bullish in color and shape. Interestingly, weekly came to the very long term trendline support and jumped up from there. If we read the other signals, they were also significant. We had very high volume. It was inside a Q squeeze, volatility squeeze. This is not a price squeeze like is used by HSI like users. That is part of the alternate template I sometimes use. Here it is showing it was inside a volatility squeeze and the squeeze went away. So it was a breakout candidate from a squeeze. It was at price extreme low until one day before, and then it jumped up with big move 3 up. And as I have mentioned many times, when we have big move 3 up at price extreme low, almost always it continues to go up, giving a profitable swing trade. And we had bullish pressure as well. So we had plenty of color coded signals telling us that we could buy, and when I shared it right at that time, probably I bought the stock first and then I took a few minutes to post it. So I was already in the long trade, and you can see also relatively how the stock was outperforming the market. The relative performance line was almost vertically going up. So that was when I shared the idea, and if you look at Spirit Airlines now, I shared the idea on this day because it was a gap up open. The stop would be just below the breakout candle's low. I entered somewhere here. By Thursday, the risk distance was covered, and usually my discipline is to place a GTC order on at least partial position, either half or two-third position when the risk distance is covered, and that order was triggered on Thursday. So I was already able to book profit on Thursday. And Friday when I woke up, I'm in the opposite to the USA time zone in Thailand. So I had a GTC order on Thursday for profit booking on partial position that was triggered. I woke up next day and I saw that my order was triggered and the candle shape was not very bullish. It had a long upper tail and also it had a bearish indecision dot indicator. So next day I watched the stock using intraday chart. Let's switch to the intraday chart. On Friday, I was watching the stock because Thursday had a bearish indecision. So I wanted to protect my profit. On Friday, price created the early range high and early range low pivot levels. Initially, price went up. What I did at that time, I didn't know that price will close down lower. I placed my stop on the remaining position just below the early range low. Then I went to sleep, and when I woke up on Saturday, I saw that that stop order was hit. So I was able to book profit on the remaining position also. I think at slightly above the price level where I booked profit on the partial position. So I am out of the trade fully, and in this case I lifted my stop looking at Thursday's bearish candle. Now let's look at the other post, other long trade that I shared. You see, I mentioned in the previous market recap, I think last two or three, that there was no preferred trading direction, and when there was no preferred direction, we could handle the market in two ways. One was to stand aside, not take any trades, or you could take long trades, short trades, both. Your long trades would be in fundamentally strong stocks, in strong industries, in technically buy setups, just like safe, very strong industry, growth stock, breakout, strong breakout setup. You could look for some short trades also, but the last couple of trades I shared were, last two at least, were long, safe, and China. Let's look at China. Brands, this company is owner of KFC. China is KFC China. They have other restaurants also. Once again, it gave a breakout long setup with bullish pressure. China was up by 6%. And when did I share the trade idea? February 11. I think the trade setup came on 10th. Let's look at that. This is after the market. Look at the industry, restaurant industry. You see the same pattern of analysis using visual color codes. the restaurants industry was very weak and then it strengthened. Not as much as the turnaround we saw in airlines industry, but it clearly strengthened. So we were allowed to buy restaurant stocks. Now fundamentally China YUMC, it was not so strong. Valuation was in the middle, earnings growth was actually negative and decelerating. From minus 67% it became minus 91%. And in fact earnings was out just 1 or 2 days ago before I shared the idea. Though restaurants industry was relatively stronger, we can see in itself it was still weak. And in fact this day when I am doing all these analysis, the market was severely down. Market was so severely down that most of the industries were down, and restaurants industry, UMC's industry was also down, but the stock itself was up 6%. Fundamentals were not so strong. But let me I'll go back to the post and explain why I bought, though the fundamentals were apparently not so strong. Usually what I say that I'm okay to ignore the fundamentals on the short side. Usually I don't ignore it on the long side. However, this was a special case. Why? For few reasons. One, the market was weak for some time. The market ETFs were in downtrend, and this particular day market was very weak. Very few industries were up. Very few stocks were up. UMC was one of them, and there were some more reasons. I'll go through the reasons. I shared them already in the post, but let's go through the technical chart. See how I could read the chart and decide on my bullish bias on a very bearish day in the market. Let's look at the weekly chart first. Once again, the bullish headwind reversal signal caught the very low. After this sharp downtrend, the bullish headwind caught the very low. Anyway, I didn't buy it at that time, but whenever we see the headwind reversal signal, either bullish or bearish, we take note. After that, next week we had the bull release signal. That candle shape was indecisive, hollow body but upper tail. And then the week when I shared the idea, it had a very bullish shape, bullish color, weekly candle with a reversal that is bullish. That is very bullish signal. And at the same time, what did we see in daily? First, we note again two bullish headwind signals. Then price tried to go down one time, another time. The second time it tried to go down also below the same watermark level where the last bearish, sorry, not bearish, where the last bullish headwind came. It created a higher low. Now, before that, when I see that we had the bullish headwinds in daily, price also hit jump thrust low. That was severely oversold condition from where a recovery was likely. These two down moves created false downside breakout, shaking out weak holders. And then we see other familiar pattern, very high bullish volume. It was at price extreme low, created a bullish reversal at price extreme low on this day, one day before I shared the idea. And then on the day I shared the idea, it had a big move 3 up with bullish pressure coming out of price extreme low with a breakout setup. Is it not very similar to SAVE? It is. Now, I mentioned there was a reason I bought the stock in spite of weak fundamentals. That was because on this day it actually had earnings. And I used Refinitiv. I saw the real-time news that apparently the earnings was bearish, meaning that it did not meet the expectation. And you can see that it gapped down at the open, but then it rallied sharply, stopped right near the trendline resistance. So if I looked at it at the close of the day on this earnings day, I wouldn't buy because it closed right below the trendline resistance. But it would be a stock to notice because apparently it had weak earnings, but it sharply recovered with a bullish reversal at price extreme low. So we could notice the stock, and next day when it gave a breakout trade setup using real-time chart itself, we could buy it. But I didn't actually find it using real-time chart. I think I noticed it near the close of the day. So I took a long trade, and because it was a sharp breakout, I decided to put my stop below the breakout candle low. Trying to put the stop below the recent swing low would make the risk distance to be too large. I wouldn't do that. Because it was a breakout setup, I could place the stop below the signal candle low. And let's see how the trade played out. Once again, I had a GTC order in the market to book profit at least on partial position. UMC. I shared the idea on this day, and then on Friday when it went to the high, in fact it didn't have to go to the high, somewhere along the way it hit my GTC profit booking order on partial position. I still had partial position left. Now before I went to bed, usually my computer is running, and before I went to bed, and that was before midday Eastern Standard Time, not my midday, my night time, but before midday Eastern Standard Time, I went to bed and I noticed that though China was still strong at that time, let's look at the China intraday chart. It started declining from 11:10, but it was still here. I think I went to bed maybe somewhere here. However, the market ETFs were starting to come down. Notice that China created the early range high, early range low, sharply broke out to the upside. But if I look at the SPY, SPY made a feeble attempt to go up and then immediately came down below early range low. And what was the time? 11:10. So when I saw that we had a very bearish shape candle, and this is SPY using pivot intraday template, 10-minute interval. It created a very bearish shape candle, closed decisively below early range low pivot, and it had a bearish reversal. So I went to bed, but I placed a stop in China also to protect my profit, and that stop order also hit on Friday. I noticed that when I woke up on Saturday. That's how I initially booked profit with GTC order in both SAFE and China. Once the profit target was hit, initial profit target was hit, and then I managed my stop, placed my stop in the market. I didn't have to track it whole day or my whole night, and those were also closed. Now before I went to bed, I noticed this bearish shape candle and the overall pattern in pivot intraday chart also, downtrending chart with a reversal candle falling below early range low. That was in SPY, and I also looked at QQQ. Usually I have these four market ETFs, SPY, QQQ, DIA, IWM, always displayed using the pivot intraday chart on one of my monitors, and I noticed that QQQ also, if you see the time here, 11 a.m. EST, it also broke below early range low, and then we had a reversal candle in QQQ also in overall downtrend, many trend line resistances. So looking at that, I also looked at mega caps. I have the mega caps also ready in a chart, and I am trading like probably all of you regularly, so I knew that either the mega caps were having gap down open after the last earnings, or if they had sharp up move, they stopped and they were starting to roll over. Facebook had a big gap down move after earnings, but Apple went up and Amazon went up, but they were starting to roll over. So I had that pattern in mind that in this market, even the stocks that were going up, mega caps at least, after earnings, they were rolling over. So Apple was one stock, and let's look at it using weekly daily first. I think Apple's earnings was somewhere here. We can check the date, but you can see it was in fact in an uptrend and then stabilized. And I was anticipating that it will start to roll over because that is how the mega caps were moving. Earlier, I saw they were either sharply gapping down after earnings, or if they went up, they started to roll over. So I had that pattern in mind. And I saw SPY, QQQ were going down in pivot chart, intraday chart, and I noticed that the weekly for Apple was magenta. So all I needed was a little bit down move in daily from Thursday. Thursday we had red color candle in daily with a bear release signal after a price recovery from below lower boundary. So if we had a magenta candle in daily, that would confirm a flow short setup. And it was at price extreme high, so that would be an attractive point to short. So when I look at QQQ SPY, they were rolling over, coming down below early range low. Then I looked at the mega caps and I noticed that Apple could not even go above early range high. SPY at least made a feeble attempt to go above early range high, but Apple could not, and it was moving inside the range after actually breaking below the early range. So let's look at 11 a.m. here. So when SPY QQQ displayed a reversal bearish candle, Apple also created a reversal bearish shape and bearish color candle, and it already broke below early range low. So somewhere here I shorted Apple. On an intraday basis, my stop would be above early range high. So I sized my position accordingly. I went to sleep, and when I woke up on Saturday, I saw that it already covered much more than my risk distance. But in this case, I did not place a GTC order because it was not a day trade. In this case, I was precisely entering a swing short trade using pivot intraday chart. Now I have already much more than the risk distance covered. Let's look at Apple again, daily chart. It's a swing trade, but precisely entered in fine tune chart. So you can see on the daily chart now that I could get a very good fill. Somewhere in the upper half of the daily candle I shorted, already covered much more than risk resistance, but it has a long way to go before hitting lower boundary or the trend line support. So I am not in a hurry to exit the trade, but I have a habit of not letting a profitable trade go into loss. I have much more than risk distance already covered. So tomorrow if it continues to, not tomorrow, Monday if it continues to go down, I'll hold. But if it starts to go up, I'll book at least partial profit and place trailing stop on the remaining position to make sure that as a whole it's a profitable trade. Just like I shorted Apple on Friday using fine-tune chart, looking at the market ETFs charts and looking at the sector industry stock breadth in real time in QH, and by running Finder, looking at the technical breadth also in real time, you could decide to short many other stocks. I'm guessing that. I did not look at the bottom up or top down analysis, and I see we are at 1 hour point. So I'll not take much time, but let's have a look at some of the flow setups. I saw Apple was one. Let's look at the technical. Maybe I'll spend another 5 minute time. Let's look at the bearish setups. Let's look at the flow bearish setups, trend following short setups, 30 of them. Incidentally, all 30 of them also gave a pullback short setup. That's great. Let's look at some of these stocks. Let's look at the stocks that went down by between 5 and 3%, 5 or 5.7 to 3%. Okay. I will go through these stocks quickly. We are beyond our 1 hour. This is GT Therapeutics, GTHX or G1 Therapeutics. GTHX in a downtrend came right to the trendline resistance, displayed the bearish indecision, tilted down with bearish flow. Also reversed from the yellow direction line. That's why it's a pullback setup also. Lower boundary is far away, so we may be able to short it with very low risk. Stop just above trendline resistance. Very good reward risk ratio. Next stock CZR, Caesar Entertainment. Notice again the bullish headwind caught almost the very low. It recovered till where? Till right to the trendline resistance, then tilted down also from the yellow direction line. Thursday bearish indecision, Friday bear release. So we could short on Friday intraday with very low risk. Has a potential to go up to the trend line support, which is far away. I am not going to spend time now going through the 360 degrees analysis, but before shorting we would look at the industry and fundamentals also. SMAR, here we have a bearish traffic light, however trend line support is nearby here, so I am not going to short it. This one is very much low in the price pattern. Let's not try to short such a stock. PVH recovered right from the trendline support, stopped right at the trendline resistance. Thursday itself gave a bearish indecision. Friday bear release, bearish traffic line. Reverse from the yellow direction line. So you could short this stock also on Friday. The trend line support is enough distance away to give a profitable swing trade with good enough reward risk ratio. Next one, AEO reversed nicely from trendline resistance. However, a trendline support is nearby. Not going to short. GDS reversed from trendline resistance, has a trendline support nearby inside the triangle. Not going to short. LYFT reversed below the yellow direction line. Red candle, however, has a lower tail, so at the close of Friday I will not short this. PDD, Pinduoduo, very narrow triangle, reverse from trendline resistance but trendline support nearby, not going to short. RXT, rack space, near trendline support, reverse from yellow direction line with bearish indecision. Friday bearish flow but trendline support nearby, not going to short. That's all. Now, interestingly, when I went through the stocks, you notice that I was not able to decide on short because several of the stocks are near trendline support. And see what we noticed earlier. IWM is right at trendline support. Also, the market breadth total view, if we look at that, no, market breadth total view is bearish, but IWM, let's look at IWM again, was right at trendline support, and I mentioned that if price goes up I like to buy small caps, and several of the stocks I went through just now, though they had bearish color candle on Friday, they are either at or very close to trendline support. So if the market goes up, that's why I mentioned earlier that most likely we'll have plenty of buy setups, and those will be the stocks that are near some kind of support, trendline support or watermark support, and then going up. If the market goes up next week, we'll have buying opportunities, and right now we have shorting opportunities. I'll not take more time today. My next public session will be next weekend, and during the week someday I will announce the time for my next master class on market breadth total view. Thanks a lot for joining. I look forward to seeing you in my next session. Have a great weekend. And as all these live examples I share on my website or Twitter page show, there is no reason not to do that. Trade profitably. Thank you.